Good afternoon. Welcome to Options Tender. Thank you for joining us here. We're going to go through CGC. I know it says MJ up there. The MJ is the ETF for the, I guess, crops, harvest marijuana ETF. So we're going to go through this. I'm not going to go through the MJ. I just want to show you in comparison. We have this huge wedge that formed bullish divergence on the monthly time frame. I think this is an excellent IRA play. We have a breakout back test. This one specifically, let's look at the, here we go. Let's look at the yield, 6% yield while you hold this. And I think this is with a monthly time frame. At minimum, we'll test the top of the wedge. And then in the long run, I really think these prices are going to be much higher. But in the long run, months and months out to years, it's going to pay you 6% at this point to hold it until we start moving up and appreciating in price. This is a win-win situation, much similar to bonds. Like I put that video out there, so I'll tag that one. But let's just go ahead and jump over to CGC. That's Canopy Growth. And we're playing this one with options. We're swinging out multiple weeks to months duration plays on this one. And so when we're talking duration plays, I have a video that you can look at, but we're usually looking at about 90 days out. October would be perfect, or even leaps much further. These, you're getting really cheap prices here. And we can also see that this one doesn't, these will grow much faster than the MJ, and they're much more volatile. So they don't offer a yield. Maybe the other ones do, but this one does not. So I'm not recommending this specifically to put in your portfolio unless you're apt to risk. But MJ, you get paid while you hold it. So I would use this one for your growth account and perhaps your dividend account and your IRA to use the MJ. Okay, enough babbling on. We have CGC on the monthly time frame. We're definitely in a downtrend still. We had a larger wedge, very similar to MJ, but I do believe at minimum we're getting a bounce. It appears that we have a 1, 2, 3, 4, and 5 wave move. So you can call that an impulse wave down there. So if you're bearish and you think this is going away, we get some sort of 60%, 50% bounce, and then much lower for this thing to go to zero. If you are more bullish, then you're looking at this as possible A, B, C correction. This is actually just a C, where it's a corrective wave, and we're looking for much higher prices. Okay, this is months to years. Years, I would say, more than months. Okay, and you saw the bullish divergences. Let's move down to the weekly time frame. I don't even have these all mapped out on the weekly, so we're still on the default here, and I can map that out. But here's what we're gonna have to get over in the intermediate term. We have these levels here over the about the $11 mark. This can be very important. You can wait till you get over there to be really conservative. But if we look closer, we're starting to form somewhat of definitely a falling wedge breakout and a back test, but maybe a left shoulder. So maybe there's a little bit more room for the right shoulder. I don't think that's the case, because I think we had our impulse move into resistance, an A, an expanded B, and a C for an expanded flat, and that's very bullish. That's a bullish type of correction. So this is going to be the right shoulder elevated. We're on top of the 50-week moving average. So we're at a really good resistance or support area. And you see we have resistance here, sort of price action oscillating around this zone, about $6, a little bit above. So this is a really good area to consider a stop if you're not willing to hold this product, if you're buying stock in this, then that would be a good stop. Or if you're in those duration positions, you can hold on to your options until you get maybe a stop underneath and a close, weekly close underneath the $6. All right. Quick look at the bullish divergence. So clearly way back here, we started forming the divergence and really bullish divergence into these new lows here with the RSI and the MACD. And now after this correction on the weekly time frame, we're starting to get a bullish crossover in the slow stoch. Really good signs, really starting to firm up, looking good for the long term. And I actually think this is a pretty good play for the shorter term. In short, I don't mean day trading or this week or maybe even not next week, but at least a month out. I think this looks really good. And this may start to break out as soon as this week. But okay, so on the lower time frame, on the daily, trend is our friend. We have that impulse move into resistance that I was talking about. Just so happens I already have this mapped out from earlier looking at this. We have an A into that same support area that I was just looking at. I just happen to draw the same ones. That's just how you figure them out. You have these good support resistance zones. And we're right back at that support. So we have the A, B, C correction, where C is actually higher than A. So a running, I said that wrong earlier, a running flat. So excuse a correction there. And we're at the 200-day moving average, just holding right on top of there, along with that 50-week in the 100 simple. Okay, so we have a little bit of work to do on this lower time frame. We're underneath the momentum indicator. We're at good support, so we're getting squeezed here. So this could take, a couple more days or so. In other words, we don't have momentum to the upside yet on the higher time frame. So we have some work to do, even when this breaks out. Sometimes these things run. I consider these very similar to commodities. And when a commodity starts to run, it's extreme. They can run for days on end with negative divergence, and same for reverse with the bearish scenarios. So this one, the wedge is getting tight. We're at support. Again, this is a zone. I know I drew this here, but it's a zone. Look at this area here. So if I drew this at the body, look at that straight across here. It's same body support right there. All right, so after getting above the 8, maybe you're a little bit more conservative and a little bit worried. So you want to get above that 8, hold on to that momentum indicator. And I'm in this early. So if you want to wait till you get above the 8, that's fine. I don't mind catching the turns when I have higher time frame supports. That will be a better wedge right there. Top. And so you have a little bit of work to do to get above the 8, and then this wedge, and then the 20. And after that, maybe start to break out. I can imagine it coming all the way up to the 50 pretty quick, and then getting some sort of back test or so. But don't underestimate. This could just run. This could just run straight up for a while. They tend to do that. Now, not much else to show. Let's look at the indicator real quick. So now that we're getting into support area, we're looking at the indicators. We're looking to get a bull cross here. Not quite the histogram green yet. So again, a little bit of work to do. Bullish divergence on the RSI. Already got our buy signal, initial buy signal. Made a lower high and a lower low, in price, but we made a higher low in the slow stoch. So we have bullish divergence there too, and we're already getting the cross for a buy signal. This is an early buy signal above the 20. All right, so looking really good here. Just at basic indicators and basic formation right into support, a wedge. This bad boy is a great setup for pretty much every time frame above you know, if you're looking out to a couple weeks, they're so cheap. I can't imagine you not purchasing them later dated in the money. If you don't know what that means, that's a whole nother class in itself with options. Even July 19th, these are in the money here in the gray. These are calls. I mean, you're getting these things for, you know, 50 cents near the money, or at the money. And then deep in the money, which is our duration plays, that's already a delta right here of 94 and 1 after that at the 6th strike. I mean, you're probably going to get that for 70 cents or so in between this. That's a huge spread because there's no volume there yet. Most people are buying at the money, but you can get these really cheap for in the money, so that will save you on your theta decay to be, you know, out to July, and I have some out to October. So, and look how cheap that is, about $85.90 or something like that, 90 cents at the $6 mark. And if you want to go deeper in the money, hold onto them longer without theta decay at the 5.5 strike, you're looking at in between here maybe $1.30 or so per option contract. So anyway, that's what I had to show you. This is a wonderful MJ for your IRA, CGC for your growth. Thanks for joining us here at Options Center. Have a wonderful day. We'll talk to you in the next video.